Hello, welcome to Market Call. I'm Michael Hainsworth. It's the 1 hour edition with David Burrows, President and Chief Investment Strategist at Barometer Capital Management. He's getting ready to take your emails, your calls, your tweets on North American large cap stocks. You can call us toll free at 1-855-326-6266. You can email marketcall@bnn.ca or follow me on Twitter and send off a tweet. David, welcome back.
Great to be here.
And on a beautiful day as it is on Bay Street, what's going through your mind these days?
Well, you know what? We're in a reasonably constructive environment. I think that investors as a whole are going through a wrestling match, slowly moving assets from the fixed income camp to the equity camp for some good reasons. And I think that some of the concerns around interest rates might be a little bit overblown, providing some opportunity in sort of the dividend camp.
In what form of interest rates are you talking about here? Because we know that the Fed in the States is not expected to pull the trigger on a rate increase for quite some time.
Right. Short-term rates, I think it's very clear. There's virtually every country that has an inflation target is below target, moving lower. So that's not an issue. And the unemployment side, you know, Ben Bernanke made it very clear. You know, the 7.6% unemployment number may actually be a little bit optimistic because you got folks coming back into the job market. So probably 2-3 years before they hit their employment targets there. GDP growth is the one you'd be concerned about. If you thought GDP growth was really going to ramp, then maybe that would move long-term interest rates higher. Although, you know, there's evidence of that in the U.S., but not so much in other parts of the world. So realistically, we've had about a 70% move up in the long-term bond rate since the bottom. If you look at the period between 1980 and present, there have been 6 cyclical backups in long-term interest rates, each one 50 to 70% before it bit and had some kind of an impact. So we've had about a 70% move higher, and certainly it's been a headwind for anything yield-related over the course of the year so far. So I'm not saying you don't worry about it. You focus on things that have an ability to have pricing power and raise what they're paying you. But I think you're less likely to have that headwind through the back half of the year.
So as you focus on equities, are you focusing more on the States or Canada? We've lagged.
Well, it's really interesting. You know, over the course of this year, we've been very focused in the U.S. really for the first time in a number of years. The equity portfolios we run are just about 70% in the U.S. And the income portfolio is close to 50%. Now, our mandate lets us go where we need to go, but that's a fairly significant statement right now.
One way to play the States with the recovery we've seen, I've been frequently told, is you can play it by consumers, you can play it by consumers focused on the housing market, but the home building side of things has had a tremendous run already. How do you play the recovery in the U.S. housing market if the home builders have already had their run? That's
actually a great question. I think that you have to look at the home building sector as 2 significant pieces. You've got the actual builders themselves, and they have had a tremendous run. And they probably do face some headwind because the backup in 30-year mortgage rates is significant, and that's causing some cancellations. However, the other piece is the pent-up demand in renovations, home improvement, home furnishing, things that people have held back on spending money. They're not so much dependent on the interest rate because they're not going out and taking big loans to do these in many cases. And that part of the market is very attractive, whether it's a Home Depot or other companies selling into that space, and that's where I would be focused.
All right, let's take a break and find out what else you like then.
Great.
David Burrows is here, President and Chief Investment Strategist at Barometer Capital Management. We're talking North American large cap stocks. You can call us toll free at 1-855-326-6266. When we come back, we'll talk about the pipeline sector.